Hey traders, welcome back to the channel and to a new video. Today we're going to be talking about the 5 factors that I use in order to identify important support and resistance levels in my charts. Whenever I start with a fresh blank chart to analyze, before I even apply volume profile or any of the other indicators or studies that I use, I will always do a basic market structure price action analysis of horizontal support and resistance levels that I like to mark off on all my major time frames. So I'm going to go over what are the things that I'm going to look for when it comes to that. Okay, so the 5 things that we're going to be talking about in this video, the 5 factors I like to use is first, the number of touches that a level has from both sides, from above and from below. Second, how clean a breakout is from that level. Third, the strength of the reactions off of that level when it is retested. Fourth, we want to see a nice rounded retest with some time in between back into that level, because as we're going to talk about, we see a level that gets touched and then market comes right back to it really fast. That's what we could consider a V reversal, meaning there's a lot of momentum coming right back. So there's a chance that level might not be, we might not get another good reaction from the other side. And then the last factor is just general trend and market structure. And this is going to be more for future retests. I'm going to be using the overall trend and how the structure is to determine if we're coming back into a level that meet all the good requirements. If I want to be able look to get in and participate at those levels. Okay, so let's start off. I'm just going to go over a few charts on the SP 500, NASDAQ, and gold, and I have some levels marked off, and we're just going to go over each of the factors that we talked about. Okay, so going over the first factor, we're talking about number of touches. When I'm looking for levels, one of the things that newer traders learn, and this is something that has been talked about for a long time, is they think that if we have a level, the more it gets tested from the same side means the stronger it is. But that is the opposite, because we know that a level, there's always, for every buyer there's a seller, for every seller there's a buyer. So when we're coming into a level, every time we touch this, we're eating away more of the resting liquidity or the limit orders that are sitting here, in this case, to go long. Now, we know that in the DOM, orders to buy and to sell, they're consistently getting pulled out, reloaded, etc. But if we see a market that just keeps coming back into a level, then the buyers are going to lose conviction, because they see that eventually this is probably going to just go through. So the more a level gets touched, the less conviction people are going to have to continue trading and trying to fade this level. And that's when you get a lot of times like a descending triangle formation, for example, where we have a compression. And so what I like to see, like we have in here, is I like to zoom out and look historically at how many precise touches a level has from both sides. And the more touches it has with good reactions, then that leads me to believe that this is a strong, significant historical level. And that is definitely something that I want to have on my charts highlighted. Okay, so here, if we see this SP 500 chart, this is the 1 hour chart here, and you can see I have several levels marked off, and this is going back This is pretty much from the beginning of June. So this is about a month of price action. We're near all-time highs. And you can see these levels, for example, we have very clear resistance. We will have, deviations or breakthroughs, but then you can see here we had 2 breaks through this level, but then it is still being respected. And now I'm going to be looking at what happens when this comes to test here, because I do expect some kind of holding. Here we also have an over-under pattern potentially forming as well. Okay, but so this level in purple, you can see 2 support, breakout, more support. Then we come from underneath resistance, we broke out from it, again support. These levels, resistance, support, resistance, support. Okay, so you can see how all these levels have many touches from both sides, giving us important reactions. And so that's why I like to mark off levels that have a lot of good reactions and touches from both sides, which are confirming the importance of those areas. Okay, the next one I'm going to talk about is how clean the break is. So when we have a level that we identify, in this case, we have a good resistance level, I want to see a very clean break from that level off. And this can be on any time frame, on any market. But when we go, I don't want to see any immediate retests back into that level. Because over here, if we would have broken out and done like this and then continued, and then we're coming back into this level, I don't have as much conviction, because this is not a fresh level anymore, because we already had a retest here. But if we have a level where we have, in this case, a consolidation underneath a resistance line, and we have a clean breakout, price goes off, and then we come back, as we're going to talk about later, with a nice rounded retest, etc. This is a fresh level that has not had an immediate retest on this time frame. Obviously, if we're looking at a 1-hour time frame and we have a breakout, and then we drill down into a 5-minute chart, we probably had a test on the 5-minute. But you can drill into lower time frames to check, but overall just set your main trading time frame, and that's the one that I'm going to look to execute in. But when we have a clean breakout with no immediate retest, then we know we have a fresh level. And as we know, a level that has heavy resistance, in this case, breaks and comes back from the top, we expect some kind of, we would want to see some support from the other side. Okay, and here, this is the NASDAQ, a 30-minute chart. And we can see we have this level, 18,687. We've had some good support here. Then we broke. We've had resistance. And then we're going to pay attention to this candlestick here. You can see we have a very clear breakout. We don't have any immediate retest. This was a very clean breakthrough from that level. And then you can see how the next day we come back into a nice retest back of this broken resistance line, and then we have a nice reaction from this. And in these levels, I always pay attention to the breakout candle, because this is where we would want to normally set our stop loss to protect, in this case, our positions. If we're looking to long this area, have our stop loss right underneath the breakout candle. And again, we're looking for a clean breakdown from this. What are examples of levels with not such a clean breakout? Well, for example, I have here, back to the chart of the S&P, and this purple level we talked about, 5,313. You can see over here we had big resistance, and then right over here we can see, let me actually zoom in because it looks very here, back on an hourly chart. You can see right over here on this candle, we have the confirmed breakthrough of this level, and then we came back twice to test it here, and then again on this one here. So even though we did have a breakout from this level, in the future now, if we would see that price comes back into this level, I would not just leave a blind limit order to buy here, because again, it is not a fresh level. We've already had some touches and some action down over here from the upside. So I'm not as certain that this would hold if I just leave a level there to buy. I can just wait and see how the action is, because it could come and bounce off of here. There's many scenarios. It could break down, or I really like the failed breakout strategy where basically you wait to see maybe this dips just below the lows here, tapping in that liquidity, and then we do something like this, and then we start holding back up again. When this happens, then this gives us a clear invalidation point, and then we can verify if this is now holding as support, and then from there, we can take our positions. Here we have an example of a very clean breakout on 52.75. If I zoom out, you can see again this level had a lot of reactions from both sides, and then more recently resistance here. So if I zoom in again, you can see we had the little consolidation right before the level, and then a big spike, no immediate retest, very clean break, and we go away, and then we come back here several days later and test out, filling in this gap. When we have this impulsive move, we leave what we call a common gaps that tend to get filled, and then you can see we come right back and test it now as support. But we had a clean break which shifted market structure up, because if we zoom back, you can see that this move broke all these previous highs that we had here. So we're now in a overall we've shifted structure into the upside. Okay, so that was the third. Okay, the third factor now is the strength of the reactions from those levels. And basically what we want to see is when a level is tested from both sides, how big of a move away are we having from those levels? Because again, like I said, if we have a level and it keeps getting tested, but every bounce is weaker and weaker, that's not really a sign that is going to hold much longer, and then we're going to probably have a breakout. Or if we have a level with just very weak bounces from either side, then we're pretty much just chopping around that level, and I would just discard it, because for me, there's not a real sense that this is giving us any significant reactions, and we're just trading through this whole area. So I would just stop using that level. But again, just measuring how strongly market moves off from a level once it is tested. Okay, so for this, let's look at a daily gold futures chart. And I have two very important levels here, 23.35 and 22.03. And in this case, you can see, if we go into the bottom level, we had two instances of resistance with very big reactions to the downside. We did come back and trade through it, but then we come back down again, and again another precise retest and a big reaction away from this level. So in the future, You can see we come back again. We didn't get a huge reaction off of this, but then we test again and a very big reaction. We test again and a big reaction. And then finally, we break over it. We come back and then we have a big reaction off of the top side of this level. So now if we would come back down here, I'm definitely watching this as a potential area for a big move from there. Same thing with the top level we talked about. It was big resistance in the past. We came back into it and we did have a good reaction off of it. If we go back into the SP500 examples, same thing again. You can look at this in all time frames. I like to, when I'm doing my top-down analysis, I just zoom out. And then, you can see these levels. This 52.17, we had a huge reaction from this. Once we broke resistance and retested, we came back to it almost a month later. And again, we had a huge reaction off of this level. This one's again, big reaction off of this from the top side. We broke below, big reaction from the underside, etc. So this factor, not only the number of touches from either side, but how big the reactions are, then that is going to be a very important factor as well. An example of a level that I would discard would be, for example, this one right here, 51.50. You can see we had some very good reactions off this level, but then when we came here, we did chop around this level a lot. So then this level for me just loses significance because we did not have very clean reactions off of this, and we just chopped around a lot on this level right over here. Okay, the fourth factor we talked about was coming with a nice rounded retest with time in between. So if we have a significant level, we have resistance, and then we have a nice clean breakout. If we do something like this and then come right back within a few candlesticks, then for me, I wouldn't really have conviction to try to fade this level just because of how quickly and the strength of the move back is into it. But if we have a move that has some nice time in between, then this will be a more high conviction level for me to just try to leave a limit order to buy. In this case, clear invalidation like we talked about below the last consolidation or the impulse candle. But when we have this, then that gives the level time also to just gain more relevance and also accumulate more orders, etc., in order to look to be traded. So examples of this, going back to the example of the clean breakout, you can see here we had the breakout, plenty of time goes through, and then we come right back into this level. Okay, we don't always, we're not going to get like a huge perfect reaction always, but other examples, we do want to see also a shift in structure. This one, for example, we had this breakdown here, which we broke below these lows. And then we come back down, and you can see we did squeeze almost back into the top of the formation, the last consolidation pre-breakout, but we eventually did come back down. But then you can see how these levels, it was a very quick breakdown, but then we accumulated some time until we came back on the retest of this area. Here's another example too. We had this area, which was a very significant area of resistance over here. And then we had the clean breakout. and then price comes back into a nice rounded retest. We did almost break through, but we did hold this consolidation, and then we have a nice reaction from this. Okay, this is another example of a level which, even though it looked like a very good level here, it did continue getting reactions in the future. But for me, at this point, we've already chopped a lot through this level here. So then in the future, I would just not keep using it, just because we had very precise touches here. But then this whole area, it's pretty messy over here. So then I would not really continue using this level on. And the fifth and final is just having to do in general with market structure and trend. If we have a market that is making higher highs, higher lows, then we identify our levels, and then obviously this is areas where we want to get in the direction of the trend if we're going up or down. So if we're making higher highs and lows, obviously we're looking to get back into areas of previous broken swing highs, or somewhere within the impulsive wave, we're looking for a retracement to get into this area. I actually have a free market structure trading course here on my channel. You can find the link in the description, so you can look at that with a lot more detail. It's a 5-part series. But basically, that's it for the last of it. We just want to get in with the direction of the trend at this level. So for example, here we had a big resistance, nice clean breakout. We're obviously now looking for longs on a pullback into the previous broken structure to the upside. We want to be going with the trend, or the easiest path of least resistance. Okay, that's pretty much it for the video. Hope you all enjoyed it. Have a great weekend, and I will see you all in the next one. Take care.